Hey everyone, me Kevin here. What the heck is happening in the market? For the last about week and a half, the market has been pretty tenuous. We've seen green days followed by red days, and we've kind of seen an average of more kind of pain in especially the technology sector than we've kind of been used to, because we've kind of been pretty dang blessed since, well, November, and quite frankly, since about the end of March 23rd, everything's just been on a rocket ship. And right now, it feels like we're losing a little bit of thrust. Technology is getting spanked in the pre-market, and so is Bitcoin. Tesla and Bitcoin both suffering in the pre-market, a sign of potentially people reining in their expectations for these high-flying sectors. Again, the cryptos and Tesla, both obviously very high-flying stocks. We've got Tesla hitting over $900 a share previously, just within the last month and a half here, and now Tesla's down 3.24% in the pre-markets, down to $756. We've got Bitcoin failing to find any support. At the moment, we've got Bitcoin essentially just free falling. This free fall kind of began yesterday afternoon, and we failed support at around 55.9, and Bitcoin went straight down from its ultimate high here of 58,366. Down now to around 54,300, trying to find some support. There was a moment where this went into the $53,000 range as well. But I'll tell you, the pre-market is not looking pretty today. We've got a few things that are green. GameStop, Churchill Capital green. We've got FRX, the Disney, former Disney executive founded SPAC here. That is doing very, very well in the pre-market, holding up 10%. But I will say, CCIV in the pre-market here, it did even better than what it's doing now. It opened up about 15% up on that news of that SPAC deal potentially going through tomorrow, Tuesday the 23rd. And so we opened up 15% up, but that quickly started selling off here as the pre-market hours are continuing. We're only up about 10% now, bringing CCIV over to that $58 price range. But I will say, this is it. Everything else is red, red, red. Take a look at this. You've got Twilio selling off 1.3%. You've got a Riot down 13%. eHang down 10%. That was great for a short-term swing trade, but otherwise, whoo, now you've got Sen selling off. You've even got Clever selling off. Tesla, there's that 3.2% down. You've got Square selling off. Let's go to the full list right here. What's selling off the most right now? Microvision down 8%, Sundial 7%, Cape, the SPAC that is advised, or some investors were advised by ARK, but is not exactly or at all invested in by ARK. OGI, you've got Matterport after the big pump we had on Friday from a CNBC pitch, which I'm so grateful we got into Matterport before the CNBC pitch, but definitely giving up a little bit here with the 23% rise, almost 23% rise on Friday, giving up about 5% here in the pre-market hours. But yeah, we've overall, I mean, the cannabis sector, the EV sector, everything selling off a little bit here in the pre-market. Let's look at Palantir just to compare. Also down about 1.9%. Still in that $28 range, $28.43, but no breakout so far in the pre-market here. Really, really tenuous market. And it kind of makes us wonder, like, what's going on? Why is the market behaving like this? A few reasons for this. One, it's really the more we see this treasury rate go up as people are selling off bonds, it's a sign that the market is expecting interest rates to go up. The reason that is when the reason people want to dump their bonds is because, let's say you have a treasury bond and I don't know, it's the 10-year treasury and you own it and it's 1%. And you're looking, you're going, I don't know, I think inflation's going to be coming. And I think that if inflation comes, then rates are going to go up and I'm going to get way more than 1% on my 10-year treasury bond. So why don't I sell that treasury bond? When you sell and there's more selling pressure on treasury bonds, what happens is the price comes down. It makes sense. More sellers, price goes down, right? When the price goes down, the yield goes up. So the quoted interest rate on the 10-year treasury goes up. And so that's kind of what we're seeing. So definitely have to pay attention to inflation as one of our factors. A second factor could be margin debt. Margin debt's gone up over 23% in just the last 6 months. More people spending more money on margin means more people with less money accessible to spend into this market, which means at some point you just run out of the cash to be able to continue to sustain the market to essentially continue moving up. When people run out of money, they stop having money to invest in the markets, and then you potentially risk a market sell-off. This is one of the reasons that I've been trying to soften my margin position, get this down to 20%, ideally under 20%. I did sell some shares last week on Monday, just as we started seeing some of the tenuousness in the market, and that feeling really continued throughout the rest of the week. Right now I'm looking at my portfolio thinking, is there anything else that I really don't want to hold on to and carry into a potential market sell-off? And the answer is yeah, there are some that I don't want to carry into a market sell-off. I might want to just take some profits on and have that cash to pay down some margin and be more prepared in the event this begins to spiral into a little bit more of a sell-off or a correction. We want to be prepared for those opportunities so we can actually go buy the dip. Last week, I did a bit of dip buying. I bought Palantir. This week, we'll see what happens. Certainly, I'm going to be issuing, if I sell any stocks, I'll be sending out an alert right away to all of my course members. You'll be the first to know what, if anything, I sell. You'll know exactly what amounts and what price I'm selling at. You'll also know why. So I'll be posting those immediately. If you're not part of that group yet, check it out. Use that coupon code HODL or HODL. It's linked down below. Check for the Stocks and Psychology of Money group. You get all my alerts, and you get a whole set of education as well. I posted over an hour of educational content this weekend as well, additional learning material, so you'll find that very helpful. But overall, let's go back to the market here. We got to remember, when the market is tenuous for inflation concerns, those inflation concerns aren't going to subside probably until June if the Federal Reserve is right. But remember, the Fed could be wrong. So if the Fed is wrong, hey, we could see that inflation stay. If the Fed is right, then we might see a little bit of pain in the market as inflation shows itself here going into March, April, and May. Some of that data being lagging, so who knows? Some say we have a little bit of time before that data comes through, but some are saying the stock market is already starting to price in some of that pain that is going to be expected with higher inflation leading to expectations that there could be higher rates. Then to follow, obviously. But if the Fed is right, that pain is going to go away sometime in April, May, or June when inflation levels sort of start leveling out again, at least on the year-over-year data, and potentially then the market realizes, oh, okay, false alarm. Now, who knows? Could be totally wrong, but this is the kind of market you want to be prepped in, especially when you've got some great news coming out on a CCIV. You're in pre-market up 15%, and all of a sudden you give up 5 percentage points in the pre-market. Look, I'm all for diamond hands. Y'all know I've got the diamond hand buddy here. But remember, you got to be safe with margin too. And we can't get diamond hand into focus here. Potentially that is a, oh, there we go. Potentially that could be an omen. But anyway, there we go, diamond hand guy. All right, let's just do one more look here at the chart. This is obviously pre-market. We got GameStop running 15%. Good run here in the pre-market, just sort of a sudden push up. It does look like a few more things are starting to turn green that were red. Earlier, there were only about 4 things that were green. Another thing that we're seeing in this market right now is we're definitely seeing a lot of this sort of weird switching around where the markets will start off red and will open red, and then they'll switch and start going positive later in the day. But it just goes to show the market is definitely on edge. The market's just not super happy. Still 8% on Microvision. Okay, softening that loss a little bit at Tesla here. You can see Tesla trying to bounce back from that bottom here. So maybe people are going to start buying this dip here. We'll see. It looks like some other stocks are behaving in that way as well. So we'll have to pay attention to this. But when we keep seeing these tenuous days, in my opinion, it's a little bit of a warning sign, and you want to make sure that you're not too heavily extended on margin in the event we do, go into that kind of a correction. Anyway, that's the update for now. Thank you so much for watching the pre-market. Make sure to use that coupon code down below, and of course, get $250 or up to $250 with BlockFi, which is a really awesome platform where you can make interest interest on your crypto, and we're talking sweet, sweet interest. I got paid over $120 in 2 days of interest, which is somewhere around 7% at an annualized rate, which is really, really good. So check that out. Go to metkevin.com/BF or metkevin.com/ well, it stands for BlockFi, but you have to go to metkevin.com/BF to see it. Check out the courses link down below, and folks, we'll see you in the next video.